YouTube? We back. Say last week was very slow volatility wise. I was not really tuned into the market. Not this week, but the week prior. And then the week before that, we had Labor Day, so I was with the family. Had a nice time at the lake. So there was no video for that week, but we back this week with a video. Like I said, this week was a little, I wouldn't say rough, but there's definitely been a lot of volatility and slow volatility at times due to the position we are, fundamentally. So we're gonna dive into it. But first, before we get started, I wanted to show you guys this Top One Futures. And no, I'm not sponsored by them, but Top One Futures has a ignited automatic funding accounts for 149. They used to be 300, but now they're 149. Daily loss limit the same. Trailing max drawdown is increased by $500. Drawdown mode isn't intraday, it's end of day, up to 50 micros. The max payout is 2,500, but to take out a payout is only 1,000, and you get to buy up to 6 accounts. So up to 6 accounts, minimum target for payout is 1,000. You do the math. Very simple. I bought two of them personally. I probably won't touch them until like next year, but I mean you got to get it. Buy while it's low. You feel me? Buy while it's low. That's what we do. We buy low. That's what we do. So I went ahead and got 2 accounts. Like I said, probably won't touch them until next year, but sale ends on December 21st. So if you guys are looking to get funded and not have to go through evaluations, because think about it, evaluation, you still have to pass whatever profit target, and then you have to do it again to get the payout. Why do all that when you can just get instantly funded and do it once? Come on, make it make sense. So yeah, this is the deal that Top One Futures has going on. Just wanted to put you guys on real quick. So yeah, but let's get into it. So this week, like I said, was very slow week trading wise. It was all about really mitigating risk because of the conditions we are in the market. It's all about taking what the market gives you and mitigating risk. That's all you could really. That's all you can do. You can't really you can't do anything else but just focus on that, and obviously keeping the psychology strong and not going on tilt. So the first trade that I took was on the yen future trade I took on Monday. Was very small, but you'll see why I just went ahead and cut profit. So this was Monday. So here I got in off the apex here, on the 5 minute. I'll get a little bit more intricate for you guys. Let me go back. So here, I seen the apex forming. We kind of set up not quite directly at the apex of the Asian, but we were bouncing off the 200. We had nothing but upside for us to to fill, and I got in here off the retest of this apex. Now price came back down, and I got out somewhere near here, somewhere around noon, for basically break even. But it ended up going higher, and yeah. I mean, I definitely could have held the trade longer, but I mean, who's trying to be in the market for what, 9, 10, 11, 12, 1, 2, 3, 6 hours for, let's map it out, 6 hours for 30 ticks. I'm not spreading myself that thin psychologically for 30 pips. So I cut the trade. We live to trade another day. So let's go to the next day. Now this is where it got sticky because we got NFP revisions as far as the job, the economic data. Let's just call it for better sake. The economic data revisions that we got on Tuesday put me into a very sticky situation. So first we'll go over the trades that kind of got me in that situation, and then I'll show you guys what I did to kind of mitigate this. So let's go back. So we're gonna start with ES, S&P mini futures, um, on Tuesday. Now I seen we were setting up here, right? Stop on here of the Asian low. We pinning right off here. Now on the 15 minute, this is where the 200 was. So I'm looking. I'm like, okay, we're right here off the 200. I probably could have waited for it to close above the 50, the 50 EMA here in the 15 minute, but price swept back down and it stopped me out. And it ended up coming back above here at 1 o'clock and going higher for 100 ticks. So this week really tested your patience as far as, okay, can you wait for the move to happen and can you stay in it long enough? That was literally all this week was about. Definitely, the market will test you to see what you're really about. Everything won't be a quick 5 minute burst or a quick 30 minute trade. It won't be like that all the time. So it's definitely interesting to see how you perform in certain different market conditions and actually being present during these trying times. Because boy, definitely different. But again, this trade I definitely could have re-entered here probably around noon and got in and yeah, but until I can actually sit here and pinpoint re-entries and things like that, because I work as well, so um, I have to be better about it and find time to get better entries, while I'm on the clock. So yeah, really no excuse there. But silver, let me show y'all silver, because this was just, oh my god, look at this candle. 127 ticks for one candle? Come on, 127 ticks for one candle. That's ridiculous. So I got in somewhere around here. I seen we got the stop hunt. We got the sweep here of the London low. Got in here. This wick, this wick was a body candle. I was 100% sure. I'm like, okay, I can walk away from the chart, whatever. I got everything, it's set. We would probably take out the London low. London high, take out the Asian high, take out previous day high. No. Boom, got me. But here's the thing. This is how you build a career and stay in the game longer. We're not here to be right. We're here to make money. We're not here to be right. We're here to make money. So sometimes you might have to be a little bit rigid in your expectations and your bias sometime from whether you buying or selling. You won't be right 100% of the time, and if you only are able to execute when you're right, then this isn't the business for you. Like, this isn't the business for you. So after I got swept here, it came through. I'm like, okay, I can get on the retest. Possibly we can take out this Asian low, but I got in here off the retest and took it to where it ultimately stopped for today, which was frustrating to me because I seen the ES trade after I got stopped out. It went 100 and some ticks. So then when I got into this one and I seen it only went like 40, I'm like, am I being pranked? What's really going on? Why can't the market reward me? But again, staying in control of your psychology, staying in control of your emotions, you will be able to basically hedge against your positions and accept the fact you was wrong and then get into a position without being in confliction with yourself. So that's basically what I did, and that's what you see. That's what you see here. The short on silver. Now I did the same thing on pound future, but the thing about pound was after I seen what S&P did and after I seen what silver did, I'm like, okay, let me be patient and not just jump into the trade because I'm understanding we got revisions data coming in, right? It did the same thing. This candle looked exactly like that silver candle. This was the NFP revisions, the jobs revisions. Granted, it wasn't 127 ticks, but this is still a huge candle. After that, I seen this is our London low right here, and this is the Asian low. Got in at the retest, but again, price did not follow through how it did in some of those other late entries that I showed you guys. So I was kind of frustrated again. I'm like, okay, whatever, but I'm taking what the market's giving me and I'm mitigating my losses. I'm mitigating my risk. If you look at it, I basically covered, this was just me ill-advised putting on too many contracts, so I closed it. But this is basically me almost covering this one, and this is me covering this one and some of this one. So I only lost one trade essentially, a little bit. I really only lost one trade. This could have turned bad quickly, but understanding you can't do nothing except the loss, try to mitigate it, stop the bleeding. Still had a 40% win rate. So that's how you do that in person and live in effect. But here we go with another trade here on gold. So on gold, this one was very very head scratching to me, but you live and you learn. So here we go. I seen here on gold, we got the stop hunt of the London low. We got here, we still pinning off the 200, and I got in like right here off the retest of this kind of like this apex area. We got the retest, and we continue higher. I walked away from the computer, but then we dwindled right back. So I'm like, I was in total like 100% certainty that we stop hunted, the London low. But let me tell you guys, sometimes you will get a wick and we assume that a wick is price. No, price has to come and sweep a liquidity zone. This was just a wick. So price came back, actual price. You see this candle and this candle. The actual price came back to stop hunt out, the London low, not just the wick. So I came here again. I got an entry. I got stopped out here. Got back in for entry here, and again mitigated my loss to $150. So yeah. So you gotta think, out of everything I could have did the past 2 weeks, I only lost $100. A little over $100. Some people blow an account, would have been blew the account between this day and this day because irritating price action, the volatility, revenge trading, like all that. So it's a skill to have if you want to make a career or last long in this industry. And I'm no guru, but I've had my fair share of blow up moments. Trust me. So and then the last trade here I took was a very very small trade, but again, look how volatile, look how choppy everything is. Look at this. Look how choppy this is. Majority of every chart looks like this, regardless. Like, just about, look how it ended the day. Chop. Look how I started this session in New York. Chop. So I got in here. Like I said, here was one of my liquidity points. This was the low of Tuesday, right? So I'm like, okay, we stopped here on Tuesday. Maybe we come back up here and retest these highs. But it did it later in the Asian session, that Friday. I got in here, and that was it. So it just chopped, and I took it for what the market gave me. But that's the main thing that I want you guys to take away from this video. Understanding that your technicals might not, your technicals might be perfect, but the market doesn't always have to abide by those technicals. You have to adjust to the market and be rigid, for one, in your expectation, and two, in adjusting your entry. Basically hedging against your losses. You can go on a heater. If you look at some of my past videos, July was great to me. August was so, but July was more than great to me. And now I'm dealing with this month. So you're going to have those. It's just all about not blowing up and understanding that this is just a moment in time, keeping your psychology strong and keeping your emotions in check. That is the name of the game. It's not a hoax. It's not something to mental attitude conversation. Like, no, it's the truth. It's the truth. It is 100% the truth. So yeah, please check out that Top Ones Futures deal. I'm gonna save those accounts to next year. I might not touch them. Like I said, it's an opportunity, so I'm not gonna touch them till next year. We're entering the quarter four. We probably got max 8 more weeks. Hopefully, we get these rate cuts. Probably that'll help a lot of things. Kind of calm down, and we can get some trending charts, some nice setups, some clear, some clear technicals going forward. To close out the year. So, yeah. So top one futures, and uh, you know, closing out the year strong. That's really the name of the game, and taking what the market give you, mitigating risk, psychology. Those are the main takeaways for this video. If you like the video, like, comment, subscribe. Please check out some of my other videos that I posted previously, because definitely some good knowledge in there as well. And I'll catch you guys next week. Peace.